Hey, good morning, everybody. I'm David Barry. I'm your host for Money Matters. This is episode 5. And boy, today we're going to probably crack open some myths that are out there. And I know Monty's chomping at the bit back there. There's a lot of news going on this week, and I can't wait to hear from Monty. But I know they said they were going to lower interest rates 5 times. And Monty, I guess the media doesn't always tell the truth. And we're gonna talk about that today because there's some things happened last week, and the rate cuts that they promised us and the media kept saying was going to happen didn't. So I don't mean to get off on a tangent, but man, the interest rates, it's really important. And I know a lot of our members are scared. So good morning, Monty. Good morning, Terry.
Yeah,
Good
morning.
day.
Go ahead, take it away, Monty. You want to go ahead and just jump right in? Let's talk about what happened. They said they were going to lower the interest rate 5 times this year, and now they're saying, well, we might not even lower it at all. It's crazy.
Well, yeah, they said 3 times, I believe, at the start of the year. They said we're going to do 3 rate cuts in 2024, and now they're down to really saying it's probably just going to be one. And we'll get into that in a minute. They did hold the rates, the Fed fund rate, steady. They didn't raise it. I mean, we shouldn't have to worry about that, but nowadays, who knows? To your point on the media never tells the truth, I would say. But it's not the media's fault on this one. It's really more the Fed has changed their mind on what they're wanting to do. So we did get tamer than expected consumer and wholesale inflation for May, which was good. That's a good sign that we didn't see high inflation. And then unemployment claims, we did see a big move higher. So if you noticed, rates got a little bit better last week. There's some reasons why that happened. Those initial jobless claims hit a 10-month high. So we're going to look at that too. But first thing, the big headliner was that they held rates steady, and they're indicating that one cut. So they've had 11 rate hikes since March of 2022, but they left that benchmark federal funds rate unchanged at 5.25 to 5.5. That's where they're keeping that. And it was unanimous. Every member of the Fed kept it the same. That marks the 7th straight meeting that they held rates steady. So we've seen a period of calm here. And just again, for our listeners, anybody that doesn't know, what's the Fed funds rate? That's the interest rate for overnight borrowing for banks, and it's not the same as mortgage rates. So when we say they held the Fed fund rate, that doesn't mean they held mortgage rates the exact same. Those mortgage rates can change. The Fed has been aggressively hiking that Fed funds rate throughout the cycle over these last 2 years to slow the economy and curb the runaway inflation that became rampant over the last few years. So that's where that was. That's the big headliner. The bottom line of that, what that means is that while inflation has cooled considerably after that peak in 2022, it remains above the 2% target that the Fed really wants. The Fed chair, Jerome Powell, he reiterated that the Fed does not expect to cut rates until members are confident that inflation is moving sustainably towards 2% as measured by the core personal consumption expenditure. So that PCE, that was at 2.8 as of April. So they want to see that at 2%. They have a dot plot. You may have seen that, David, Terry, where they say each member of the Fed, they vote, and they do this without the others seeing it independently. They all say, well, how many rate cuts do they think? At the start of the year, they had said there would be 3 of those. By March, we thought we'd see the first one, but now they've changed that, and they're acknowledging we think there's just going to be one. But those can change. That's the thing I would encourage everybody to realize is that can change. You get some different unemployment data, you get some different inflation data, they start looking at it the way that we think they should be looking at it, and they could quickly decide, oh, we're going to do 2, not 1. So that's the big headline for this week.
Well, I know that as a realtor, as a licensed realtor in Southern Nevada, I just know that people are scared. I mean, and we had a conversation yesterday with a client in California. The poor lady started crying. I mean, she's scared to death. She was talking about losing her family. And I had something really interesting happen yesterday, Monty. I had an actual mortgage lender. I had a conversation with. He's leaving LA, he's coming to Las Vegas, and he said, absolutely not. It's not a good time to buy. And I think that the housing is going to start coming down drastically. And we went back and forth for about 20 minutes because I said, we've got the NBA team, a Major League Baseball team coming here, and inventory is staying relatively low in Las Vegas. So maybe you could share with our listeners, because I mean, the bottom line, Monty, I believe, is a lot of people are scared. They're nervous. They don't know what to do. We have a ton of people. Terry's got almost 300,000 people talking back and forth about leaving, and people are nervous. Can you touch on that, Monty?
Yeah, you want me to touch on people being nervous or why it's still a good time to buy, even though
Both.
this one lender doesn't think so?
Yeah, both.
Okay. So you've always got outliers. You've always got people, even realtors and lenders, that would say it's not a good time to buy. Or in this case, like you shared with us, he thinks there's a market crash coming. There's no indication of that. So that's okay. There's always going to be those people that believe that. Not a big deal. A lot of that's due to life experience of that person, what they've seen, and just how they operate out of a state of fear. So I would tell you, you've got to see where these people are getting the data from, and you've got to make your own decisions. Now is the time when you've got to decide what you believe and why you believe it. Don't be steered by anybody into what you should believe. Read it for yourself, learn. So I would tell you, it's not about timing the market. Terry had that great phrase earlier. He said, it's not about timing the market. People try to time the market. It's more time in the market. If you look at anybody that's done well in real estate, who's made lots of money, built wealth, it's because they've been in it for a long period of time. It's not because they just found the best deal ever and then sold it and never got back in. So I would tell you, it is a good time because you can buy low, which is the most important thing in real estate. You got to get a good deal on the front end. You make your money when you buy. And right now, you can make money when you buy. So I would say you should move forward.
One of the things, David, let me just address that real quick too. Also, I follow a gentleman who 3 years ago next month, July 2021, said any day now the stock market is going to crash 90%. He said that 3 years ago. Any day the stock market is crashing 90%. The market has done virtually nothing but go up. If you're real estate is even a better investment than the stock market in my book. I bought my house in California in 1999, went through the crash of 2008 where the price got cut in half, literally got cut in half, and still ended up selling it for more than it was before the crash in 2020 for hundreds and hundreds of thousands of dollars more than I had paid for it. And all along, everybody's saying, the real estate market's going to crash. Well, I can tell you what, if people are leaving California and they're moving somewhere, they're going to rent or buy somewhere. They're taking that equity that they've got in California. They're going to rent or buy somewhere, and they're not going to live on the street. They've got thousands of dollars of equity, hundreds of thousands in many cases of equity. They're going to buy somewhere in the South. So if you're moving to places like Las Vegas, you're moving to places in the South, places that are desirable for people to relocate. I'm sorry, it may crash. I don't know. It may crash next week. It may crash tomorrow. But the likelihood, you can't live your life on estimating that it's in fear and estimating that there's going to be a big crash and I'm just going to wait till it crashes. You can't live your life that way. You've got to you've got to live your life, make your investments. If it crashes, it crashes, but just ride it out. It's an investment. It's not, it's your house. And what do you miss if you rent for the next 5 years waiting for a crash? You miss out on the tax write-off if you've got a mortgage on the interest rates. Sorry.
Well, Terry, that's a great point, Terry. And the fact that we have Monty Felts, our national lender, I mean, we're so blessed to be able to have the show and to get the real information. And I guess in his defense, somewhat, Monty, he lives in LA. So the LA market is totally different than Las Vegas. So I'm trying to talk to him about Las Vegas, but in his brain, I think he was talking. So by having experts, I think it's important. And we do realize that the different markets and what Terry's talking about, my goodness, when we did the Southern Freedom Tour, Terry fell in love. Like Terry actually, before we left Tennessee, he said, I think I may invest in a property here in Tennessee. He was super excited about it. So maybe you could touch a little bit, because you work with so many different markets throughout the country, Monty. And I guess there is some logic and reasoning going in. If you're talking about maybe buying a home in LA, I mean, it's definitely different than Morristown, Tennessee, right, Terry?
Oh, absolutely.
Yeah, absolutely. I was out in Orange County, California this weekend for a training Thursday, Friday, and Saturday, and stayed with a good friend. in his house. He has about a $5 million house. But what's funny is even at that level of success, he's still talking about leaving. He was saying, I got to get out of here. And I said, where are you going to go? And he said, probably Tennessee. I said, really? Nashville? He said, no, probably East Tennessee. So even those who have achieved everything you think you want in life and business that are in California are still talking about leaving just because of the insanity. And I saw it with my own eyes while I was there. It is crazy. And as you said, David, lady on the phone crying, afraid she was going to lose everything if she didn't get out soon enough. So I would encourage people, go ahead and make that move, make that decision. A couple of the things from the week that we saw that were highlights, just on that inflation. I would tell you, as you're learning, you're watching our show every week, you're learning about what this is. The CPI and the PPI and the PCE and all these funny acronyms about inflation. That's great. Do that. Educate yourself. We've got PCE coming out, the personal consumption expenditures, on the 28th. We're going to get that PCE report. And so that's the Fed's favorite measure. And if we can get some friendly data there, that's going to be a really cool thing that could impact our rates and the market June 28th. So in about 11 days, we're going to get another indication. So as you're learning, every few weeks, we get some new data that really moves things. The job claims, that's the other thing we talk about a lot. Unemployment, this past week, we got the initial jobless claims, and those hit that 10-month high that I mentioned in the intro. We were up by 13,000 in the latest week. So that's 242,000 people now that are filing new unemployment claims. It's much higher than what they expected. They thought it was going to be like 225,000, it's 242. And there's also that 1.8 million people that are still receiving benefits after filing their initial claim. So this is good in that we're seeing there is a true issue here in our country with employment. Those initial jobless claims have now risen for 3 straight weeks, which is the latest reading, the highest number of first-time filers since last August. So that's that 10-month high. Continuing claims, as we said, are still trending near their hottest levels we've seen in a few years. The Fed will closely watch this. They're going to see if there's a sustainable rise in that unemployment because they weigh that monetary policy and the timing for rate cuts on that dual mandate that we taught you. We've talked about that, the price stability and the maximum employment. So that was the other big thing I want to make sure we mentioned today from last week.
Well, the thing is about us, I hope that all of our members are starting to realize that we have great resources and that we have great education. We're just here as a resource. We love having the community. We love having our members sharing comments and sharing stories because that really helps. And, we have Terry, who is he's becoming the national expert on people leaving California, and these large media outlets contact Terry and they want to ask him his advice because he really has a good handle on that. By the way, Terry, is there anything going on in California that we need to know about that's crazy?
Great news. San Francisco has installed 100 of their estimated 400 hidden cameras that they're going to install to help lower crime. So rather than enforcing the law, which they don't really do there, because if you do commit a crime, you're out on bail within an hour to commit more crimes, they're installing, I think they had a $17 million grant from the state of California to put up these 400 cameras so they can watch criminals commit crimes, arrest them just so they can let them out so they can commit more crimes. So that's the great news from San Francisco, is that smile, you're on candid camera as you commit your crime.
And my tip for this week is decluttering. A lot of our members that have left California, they always seem to say, the ones that say that they had like a garage sale or they got rid of a lot of the stuff that they had accumulated, they always seem happier. And I know that you talk to a lot of people about leaving California. Terry, can you share maybe a tip about decluttering or having a garage sale, getting rid of some of that stuff, and talk about moving when you're leaving? What advice would you give?
My number one advice is that we have a list of vetted movers, verified movers who are properly licensed, insured, and have great safety records. Do not go with a moving broker. How do moving brokers work? They take a deposit, typically $1,000, $2,000. Then they find the cheapest mover they can find. Sometimes that's a single guy who's rented a U-Haul. He shows up at your house. He packs your stuff all by himself, loads it up, drives away, and then a lot of times gets to the other end and says, you know what, I'm not getting paid enough. If you ever want to see your stuff again, I need another $5,000, $10,000, $15,000 before you'll ever see your stuff. This happens every single day. The challenge that these brokers change their phone number, change their license, and they've already moved on to start swindling the next person. Do not use a moving broker when it comes to moving. Their pricing will sound extraordinary, but once they get that deposit, that's all the money they're going to make. They're out of the equation. You need to look at under our files tab. You'll see our verified movers. All of them are family-owned businesses that do business nationwide, and they can help pack your stuff if you want to do that, but certainly move you in a safe and easy way. And I've found this out recently. Most of them have helped hundreds and hundreds and hundreds of members of our group. Cumulatively, they've helped thousands of our members move across the country out of California in a very safe and reliable way.
Well, that's great advice. Thank you, Terry. And then last week, Monty, I know we got to wrap up on time. We got about 4 or 5 minutes left. You had teased everybody and you had said that you're going to be giving a little more information about the, what was it? Buy now, sell later program. Yeah. And I know that you had talked to a client yesterday that was the one that was really upset and she was really interested in that. Can you touch a little bit more about that program?
Yeah, for sure. The simple explanation is you never need to write another contingent offer anywhere in the U.S., all 50 states. No need to write a contingent offer. So you don't need to sell your house before you buy another one. If you're in a contingent offer right now, you have your house that you're buying contingent on you selling your house in California or anywhere else. You can remove that today. We can take that away and you can just move forward. If you haven't made the offer yet, I would tell you, you'll get a better deal on the house when you don't have a contingent offer. So simple thing is you just need to reach out to me and we will see how it fits for you the best. But yeah, that's the main thing. Couple other things just as we wrap up here from my side would be, I want to acknowledge we've got Juneteenth coming up on Wednesday. It's a super important holiday. I'm in Texas. It took 2 years from when our African-American brothers and sisters were freed, when freedom came through the Emancipation Proclamation. It took 2 years for that news to get to Galveston, Texas. And that's really sad to think that people worked for 2 years not knowing they were free. And so that's an important day. We want to acknowledge that. Yeah, I know. Yeah, it's really important. So know that that's coming up on Wednesday. And then I also wanted to say, I believe that you've got to listen to somebody that knows how money works and how wealth is built in real estate. I remember when my granddad did that for me as a kid, about 9, 10 years old, took me aside, taught me a lot of things about how money works, how real estate works, how you can get ahead. And that taught me lots of lessons that I now use today. And that created this passion in me to do that for other people. So I want to challenge everybody listening to reach out to me, have that conversation, let me pass on what was given to me and get you in a better financial position.
You know, it's funny, you say it like it sounds so simple. Yeah. You know, you can go buy your house now and you can sell later. It's really not that simple. It is complicated, but what happens is the concept is simple, but the people, the professionals that we have in our group that are able to do this, they have the complications. They take care of all the back end stuff, but the concept is so simple and it really does work. And you owe it to yourself to at least give us a call and find out more information, because you don't have to do it, but it is an option. It's out there for you. And man, Monty, it's just been great. Terry, I understand that this is our most popular show, and we've been doing the other show for almost a year now, and this one is starting to really explode. And by the way, for all of our members out there, if there's anything that you want us to touch or information that you want us to share more about, or you think, wow, that's a great topic, could you guys talk more about that? Write it in the comments. And please, 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 if you like our show and you know other people, please share it with them. You know, we want you to like and comment and share our post. Terry, do you have anything you want to say in closing?
No, I'm looking forward to a great week and looking forward to helping a lot more people leave California. Our groups are continuing to grow. excited about that. Excited that people want to understand that there is a freedom out there away from California, and love working with people like Monty and you, David, in Las Vegas, and looking forward to more great success stories about people who left California.
Well, great. Episode 5, Your Money Matters, and we care about it, and we want you to help you make really good decisions. Have a great week. We'll see you next Monday.